Hello, my name is Malcolm Skinner and I'm a solicitor in the LexisNexis Private Client PSL team. Today I'm joined by David Truman, Head of Private Client Services at Menzies, and by Lucy Mangan, who is the Director of the Tax team at Menzies. Today David and Lucy will be discussing the recent budget on 16th March 2016, and we'll be pulling out some of the key changes relating to property and entrepreneurs relief that were referred to in that budget. So to start with, for anybody who's not aware of those changes, perhaps you would briefly describe them to us.
Yes, Malcolm. The first main change, which was a little bit of a surprise, was to the rates of capital gains tax. These had previously been at 28% and 18% for basic rate taxpayers, and with effect from the 6th of April 2016, they have been changed to 20% and 10%, which was, as I said, something of a surprise.
Yes, indeed.
However, there are two areas that they don't cover, the first being carried interest, which is relevant to private equity investors, and the second one, which perhaps would have been welcome, is for residential property, which doesn't qualify for the principal residence relief.
Yeah, I mean, it's very disappointing that the lower rates won't apply to the disposal of residential properties. There's been many recent changes in the taxation of this area, and many of our clients and property investors will be worse off, sometimes considerably. If this rate had applied, this would have enabled some investors to potentially sell these properties. The tax rules going forward are going to be considerably different to when they made their investment decision, and that would have been very welcome. It also would have freed up a lot of houses into the market, hopefully, which would have helped the first-time buyers.
Absolutely.
Potentially, this could have been combined with the Chancellor bringing forward the date where tax arising on the disposal of properties has to be paid within 30 days, and therefore this could have given a big improvement and a good impact for the Treasury.
Not entirely good news then, really. Okay, so that covers the change in the CGT rate. What about the changes to entrepreneurs relief?
Entrepreneurs relief has been an important relief for our sort of private clients who also own and manage businesses. It was introduced in 2008 to replace taper relief. I think the feeling is that taper relief was a more generous relief than entrepreneurs relief in the sense of what was available. And whilst you can get the 10% relief for gains of up to 10 million, it has been it only covers people who are business owners and managers, essentially.
Precisely. I mean, although entrepreneurs relief has been very successful and many people have benefited, up until the recent budget, it did only apply in quite a narrow set of circumstances, and there were very strict requirements. For example, if for shares, the shareholder has to have held those shares for 12 months, has to own more than 5%, and had 5% of the voting rights, plus been an officer or an employee of the company. This is quite strict. There are some relaxations if you've obtained those shares through an EMI scheme, but it's still quite strict.
Yes, and obviously in the budget it has relaxed these conditions a little bit, so to the extent that we now have effectively an investor relief, such that where you've got new shares issued after the 17th of March, and you hold those for 3 years, you'll qualify for a wholly separate £10 million reduction to 10%, which enables those who are both investors and owner managers to qualify twice effectively, which is a very good thing.
So that's a bit of good news.
Yes, it is.
Okay, you mentioned the relaxation and reversal of some other elements of entrepreneurs relief. What can you tell us about those?
Well, following the budget in 2015, it almost seemed that the government had got the impression that entrepreneurs relief was doing a little bit too well, perhaps, and that people were perhaps using it in circumstances which were creating avoidance of tax. So they introduced some provisions which they now have effectively created a U-turn on. And particular changes in the budget are that we have returned to a position where you will be able to qualify for entrepreneurs relief on goodwill on an incorporation, where you're transferring the business from sort of unincorporated into a closed company. We are returning to a position where for joint venture situations, particularly in the property businesses, where they will again qualify, which had been taken out in the previous budget, We have some extension into associated disposals where you transfer assets which are used in a business to a family member, and also in some cases where you might have held 5% previously, but that has fallen below 5%, there are going to be some relaxations in that area. I mean, all of these things sort of slightly taking us back to a position we were in before, which it's good to see that the government have taken things on board.
Another piece of good news. Now we come perhaps to the less than good news. David, given the changes around buy-to-let properties, which patently make it more difficult, more costly to operate in that area, that industry, if we can call it that, what options do our clients have now?
Yes, this is
If any, of course.
this is very much the hottest topic at the moment. Previously, it almost seems like the Chancellor has got it in for private rental investors, of restricted mortgage interest and finance costs being the main change, but also the additional 3% stamp duty, removal of the wear and tear allowance. It has been suggested in sort of commentary that incorporation is the sort of one size fits all to our answer to this, but it's very clear that that can apply in some circumstances where the individuals really are running a business, but in lots of situations it is going to be difficult for our clients. There are attractions of a company because the headline rate of tax is only going down to 17% compared to the 40-45% rates of income tax. But what people do have to remember is that if you need the money and you're extracting the profits, you're almost back where you're starting.
Definitely. And also the other thing, the important thing to remember is that tax implications do arise or can arise on the incorporation. So if you're transferring existing property portfolios into a company, there will be a CGT and a stamp duty land tax charge and less relief supply. One of the key reliefs on the capital gains tax is being able to roll over those gains, and that does rely on you carrying on a business, not just having the odd rental property, and they are quite hard to fall into. And also it's important to remember that if you are holding residential properties in a company, you fall within the ATED rules, and you've got to make sure that you file your return, claim your release, otherwise substantial penalties can arise.
So all in all, a budget with a little bit of good news, but perhaps more bad news than good news?
Perhaps, yeah.
I think,
but some surprises.
Yes, which is always nice.
Which is nice.
And I think the thing to take away is that planning, as always, is very key.
Good, excellent. Well, thank you both very much. That was very informative, very helpful. Thank you.
Thank you.
Thank you.